Now, stocks pulling back from record highs on fears of a central bank rate increase that could come sooner than we thought. And you know why? Because our very own Peter Barnes sat down for an exclusive interview with the New York Fed president, who hinted a rate hike is still on the table for September. Watch him here.
I think we're looking for growth in the second half of the year that will be stronger than the first half, so some acceleration in the growth outlook. The labor market continues to generate reasonable job gains. We've 190,000 in the last 3 months. So I think, we're edging closer towards, the point in time where it will be appropriate, I think, to raise interest rates further.
Okay. Peter Barnes joins us now, along with Recon Capital CIO Kevin Kelly. So, Peter, he thinks, what, September is a possibility?
As soon as September. And one of the things that he's been talking about is that he feels that investors have gotten complacent about the prospects for a Fed rate hike, particularly now when we have had two pretty solid jobs reports that could help the Fed accomplish its goal of, creating more jobs and getting the unemployment rate down further. And so he wanted to make sure that he was communicating to the markets which now believe, Kevin, that there will be no Fed rate hike until the end of next year. 1/4 point increase is what the futures markets were forecasting. I think he was trying to pull some of that in and let investors know.
Look, guys,
listen,
it could happen sooner than you think.
Yeah.
There are, however, some challenging realities to his wishful timing, in that you have an election, Kevin, in November, and typically the Fed tends to be very hesitant to actually move ahead of an election. Why is that?
They do, and he even commented on that interview this morning. He was saying that's why September is on the table. They're not looking at the election, and that won't be one of the considerations that they will have for a Fed rate hike. And so I think that's interesting, but regardless...
Wouldn't that kind of stick it to Hillary Clinton, though, if they say, okay, we're going to hike come September, the market tanks?
That would, but investors are solely focused on the fact that it's not the hike that would really move the market. They could hike in September, and it wouldn't really make a difference. What would make the difference is the guidance, and that's what led to all the volatility in January, because they had 4 rate hikes priced into their guidance throughout this year, and we've seen they haven't done even one yet. So the market is going to focus on that. That's
an important point. So they're out there talking, and they're saying, we're going to do this, we're going to do that, and he told you we're going to do this. At what point does that actually transcend to reality? I mean, is he trying to influence the market, or is he actually really able to follow through? Because you can only cry wolf so many times.
Correct, and that's one of the big issues, is the Fed's credibility. And we have asked Fed officials over and over again, hey, what about this? You guys keep forecasting, keep telling us that a rate hike is coming, it's coming, it's coming, it's coming. Then all of a sudden we have Brexit, or we have weak jobs reports, and it gets put on hold. So they continue to try to communicate that this is data dependent, that we're not on some programmed increase schedule as they used to be back in the day under Alan Greenspan, for example. And so Dudley said today, September's a possibility, but it depends on the data. And
well, it's interesting that he's telegraphing September, though, because that's also sending a message to the Clinton campaign, and perhaps as well to the Trump campaign, which is trying to stay on message in terms of the economy. Thank you so much, Peter and Kevin.